This is not surprising. The seasonality of gold is the lows are almost always hit in August. Is the seasonality perfect? No, but it's more often than not. Silver and gold track together. I don't think the correlation is still 85%. I don't think it's quite that high, but it's still very high. And silver, very similar from the end of July at 24.50. We're at 22.50. What's interesting on silver, as you said, is it actually went below 22.50 and now it's above it. And so, it's debatable. I've said for years that the whites lead the yellow, and at times they do. And at other times gold leads.
Last June, we analyzed monthly seasonality in gold returns. We found quite a material shift in seasonality since the 1970s, with the last 20-plus years showing stronger January and August averages, and the former also ticking the statistically significant box. David Morgan, a distinguished consultant in the precious metals sector and also the author behind the Morgan Report. In this video, David Morgan explains gold historical August trends and a potential weakening correlation with silver. The historical evidence suggests that the gold-to-silver ratio entering the 80 to 100x range may act as a signal for a significant rally in the price of silver. David Morgan shows bullish sentiment in the Commitment of Traders report, with banks shifting from short to long on silver. Currently, the Silver COT report paints a bullish picture. The net positions of commercials and non-commercials are very bullish. This suggests a collective belief in the potential for higher silver prices. Speculative positioning in silver futures has been choppy in 2023, with the market being net short in early March. However, the onset of banking woes, triggered by the collapse of SVB, not only lifted gold futures demand, but boosted silver futures demand from non-commercial users seeking to hedge their portfolios. Regarding the silver market, David sees promising opportunities in the current market setup. Meanwhile, mainstream press recognizing tightening of the silver market. We estimate the silver market is entering a period of tightness unseen for decades. This may not be alleviated by higher silver prices. David also mentions that stocks are not performing as well as metals, indicating a potential shift in the relative strength between the two asset classes. 26% of Americans ranked gold as the best long-term investment in 2023, almost double the 15% who thought so in 2022, according to a recent Gallup poll. The share surpassed that of stocks. 18% of Americans ranked stocks as the top long-term holding, down from 24% last year, according to the survey. Now we are presenting you the glimpses of David Morgan insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
The Commitment of Traders looks as bullish as it has in a very, very long time. As you outlined, the banks that are almost always net short are actually net long, and that just happens very rarely. So the setup is certainly suggesting a rally here. Problem with the COT that I've discovered over years is that the trend change is usually forecast by the Commitment Traders, but it's not very good at timing. In other words, we know this is taking place and people might expect it to be tomorrow or within a week. Sometimes it is, but oftentimes it's delayed. However, I will stick my neck out as I've done many times. I really think it's close. In other words, I think silver will bottom first. It looks like it has, but we need more days of trading to be sure. And I think the Commitment of Traders is highly suggestive of what we've seen in the mainstream press. I know I'm rambling on, but we've seen things in the mainstream press, Elijah, we haven't seen in years. And that is where the mainstream says things like silver is a tighter market and could be tight for a long time. That's not the exact quote, but that was the inference. And that was from a mainstream. And we've seen other columns like that. And this is sort of forecasting to let's say the mainstream players that silver is actually looking very, very good, not only here but for the foreseeable future, and that's a true statement. The only thing that's lacking in the silver market isn't retail demand, although that's slackened off somewhat by the premiums. We know that. Certainly, industrial demand continues to grow, but it's the institutional investor that's absent this market. And that's rather interesting. because normally on a $2 move that we saw a couple months back, where we went from basically the present level we're at to 25, that rally is the type of rally that the algorithms will point out to the trading funds, to money managers, to institutions, and they'll take advantage of it. Some did, but not to the level I would expect. The seasonality in gold is August. Is it always true? No. The seasonality for the stock market is October. Is it always true? No. But your question, the end of the year, I fully expect to see the metals do much better by the end. I think there's going to be an event or multiple events that start to shift the perception of the average investor, maybe out of stocks or lightening up their stock position, or at least not adding to it, and moving more into the precious metals. And we've already seen that by the banks, and the banks are the smart money. We've seen massive buying by the banks that we haven't seen in years, and that's the beginning of the run to gold. So I'm pretty confident in what I'm saying. The problem is for most investors that have been in this market for the last decade is they seem to do a round trip, 2000 and 2011 to 2000 today, and it made a big U, and they're frustrated. You know, people that bought at the top, it's back to where it was, holding on for 10, 11, 12 years, and it's only even. It's not very good. And the stocks have not done as well. The stocks are underperforming the metal.
Although it's hard to guarantee anything in the world of economics, the devaluation of currency is something that seems almost inevitable, while precious metals have remained highly valuable for thousands of years. In the last century, every major currency has lost 97 to 99% of its value relative to gold, with the remaining 1 to 3% seemingly only a matter of time. During the interview, David Morgan highlighted the BRICS meeting as it might focus on enabling direct currency settlements among members while reducing reliance on US dollar. While it is unclear whether a new BRICS currency would inspire the creation of other US dollar alternatives, the possibility of challenging the dollar's dominance as a reserve currency remains. And as countries continue to diversify their reserve holdings, the US dollar could face increasing competition from emerging currencies, potentially altering the balance of power in global markets. Let's get back to interview.
As far as I can tell, the August 22nd meeting is going to be talking about it. I don't think it'll be implemented, or if it is, it'll be implemented in a very small way. But the idea is important. And the problem with it as it stands currently is it's not convertible. You can't directly convert the BRICS to gold directly, but you can indirectly. And so there's meaningful thought around it. I don't think that it's going to have as big an impact as many others have written about, but it could over time. But the initial thrust could probably move the metals markets on a what I'll call knee-jerk reaction, and then it settles down within a few days or a week or so. Once that's established, we got to watch it more carefully to see, again, if they actually implement something. Problem is that the debt problem is a US dollar problem. It's not a BRICS currency problem. And so no matter what happens with the BRICS, the debt owed by all these foreign nations are still dollars, which means they've got to go to the foreign exchange markets and convert to dollars in order to pay off the debt. Now, the main thrust of the BRICS isn't so much gold or gold backing. What it really is using foreign currency as final settlement. So I can settle with Brazil with their currency. I can settle with India with their currency. I can settle with Russia with their currency. That means you don't have to convert to the dollar to buy oil, as one example. And that's very powerful. So I think that's the main thing to think about coming out with this announcement that's supposedly or probably will take place on the 22nd of August. And that carries more weight than a gold-backed currency that's not convertible. You see, even these small countries are buying for them massive amounts of gold and put it in their own vaults. You're seeing gold recalled from, the Fed or the United States to repatriate their gold to their own country. So if you just see what's actually happening rather than what's said, it's very clear that a lot of companies are basically getting their hands on, I'll say, as much gold as they can. That's probably an exaggeration, but it's obvious that these countries are moving into the gold market. So certainly it has a big impact. And, whether you could trade in gold through the BRICS currency or not, right now, no. If you could in the future, that would certainly have a big impact. But there's no doubt in my mind that the run to gold started. It's just started with the banking system. It hasn't really spilled over into the institutions. I'm talking about pension funds, managed money, your major commercial banks, even your money center banks. I mean, it's only the bullion banks or banks that are associated with their balance sheet looking at gold as a tier one asset that happened with this Basel agreement that are really concerned about gold. The gold trade is actually diminished from the banking side basis, the gold trading desks. A lot of those just disappeared because the requirement under the Basel agreement was cumbersome enough to say, you know what, we're only making 2% of our bottom line trading gold. Get rid of it. Get rid of it. We don't need that kind of hassle for a 2% increase on our balance sheet. So it's a consolidation of the gold market. And I think that trend will continue. But there's a lot going on behind the scenes that most people are not cognizant of because they don't know where to look or whatever. So they rely on, shows like yours to really understand that even though gold is going nowhere, you might call it another accumulation phase at a higher level before the powers that be do the markup.
While uncertainties persist, the historical devaluation of currencies and the enduring value of precious metals raise important questions about the long-term stability of financial systems. Could the current scarcity of silver lead to a significant price surge in the near future? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.